All right. Well, hello and welcome to today's NACO webinar. We really appreciate you taking time out of your busy days. Good morning to those of you on the West Coast, and good afternoon those calling in from the Eastern time zone. My name is Kyle Klein, and I serve as Director of Financial Partnerships for the NACO Financial Services Corporation. And we're thrilled that you've joined us today for the webinar on the topic of Top 10 Attributes of a Well-Run Treasury Department. I'm pleased to be joined today by our partners at NACO, 3+one in the program Cash Vest, and Mike Ablowich, who is the Vice President at 3+one, who's going to be sharing more about some of these best practices and the attributes of what a county treasury finance department should be looking at right now. And, of course, certainly there are many things going on in the marketplace. Things are changing rapidly every day, it seems. Whether you're talking interest rates, you're talking about government banking and, bank structures and different arrangements. And this is our commitment to continue to provide best practices and good information to you that could be useful within your counties and for your taxpayers. Which again falls in line with the NACO mission, and our mission at the NACO FSC is to provide different programs, partnerships, and value-added solutions that can generate revenue or savings to you all. So again, thank you. Just want to invite all of you to submit your questions via the chat function at the bottom of your screen. There's also a Q&A button. So either way, you can submit your questions there throughout the duration of the presentation, and I'll be monitoring that and making sure that those questions are answered in a timely fashion. So, and then also at the end of the presentation, you'll be receiving some contact information. You'll see at the end, if you'd like to be in touch with 3+one to learn more about their liquidity services, you'll have that opportunity as well. So without further ado, I'd like to turn it over to Mike Ablowich with 3+one, our speaker today. Mike, really appreciate your time and being with us, and really look forward to that. If you don't mind, I'll just read a brief bio. I know that you'll be explaining a little bit more about yourself and your background, but currently, Mike is Vice President, as I mentioned, at 3+one, but he comes to us with a lot of experience in public financial management and public sector treasury services. For over 30 years, he was a state treasurer, also was a state budget director, and a technical advisory to a lot of national treasuries around the world. So it's not just domestic treasury experience that Mike has, also working in developing nations and working to improve their systems and financial accountability as well. For the last 15 years, Mike has worked abroad in those countries, strengthening the transparency, the treasury operations, and working for the U.S. Treasury's Office of Technical Assistance. And now with 3+one, Mike brings his wealth and knowledge to lead our relationships teams to providing the best treasury management, data analysis, to public finance offices at the local government level nationwide. So we're really we're very privileged to have Mike on the team and to be our partner at NACO. So I'll turn it over to Mike at this time. Mike, welcome.
Hey, thanks, Kyle. Good morning, everyone, and good afternoon as well, depending on what time zone that you're in. I'm really grateful that NACO has allowed me to spend some time with you all today, give you some thoughts on the top 10 trends, attributes of well-run treasury departments. I wanted to mention kind of right off the bat, depending on the size of your entity, you may or may not have a treasury function officially. Maybe you don't have 3 or 4 people specifically designated as your treasury. You may, in your finance team, all wear different hats. You spend part of the time during the day in a treasury function. Maybe you're doing accounting. Maybe you have a budget responsibility. So my comments here are really, even though we say a treasury department, there's a number of these things that are applicable to any finance, kind of finance office that has the responsibility for cash management and treasury management. We're going to share 10. Let's just agree in advance that there's easily another 10 or 15 or 20 or 3 or 4 trends that we could add in here. So as we go through here, if there's something that I've missed or that you don't agree with, drop it in the chat, and then we can talk about that sort of at the end and sort of follow up on that. So without further ado, let me run through the slides for you and sort of to frame up the discussion. So just my contact information at 3+one. So the first thing, and this is maybe, I don't know if personal is the right word or professional to us, but at 3+one, we are a data, principally a data company. So we think one of the first most important things is that as finance officials, we need to understand and believe that data has power to help us drive decision making. Now, one of the challenges is that there's a ton of information out there, and a lot of public entities don't think that they have the time or they can find value in looking at their data, or maybe some don't even have the tools to slice and dice and download the data that they have. One of the things that's helpful to understand is the process that you can go through to start to look at the data that's at your fingertips, and again, kind of recognize that this is valuable information. And the slide that I'm showing here, this is sort of the best way to describe kind of how we should be thinking about the data that we have. So the first thing is we got this jumbled mess of Legos in this particular case. That's sitting in our integrated financial management system, or our ERP somewhere. And it's all, we know it's there, but we need to start to download it. We need to get it sorted. We need to start arranging it, start to think about it. And again, start to explain with a story. That's sort of the best way to think about the information that we have in front of us. And I'll give you a quick example of that. So we were talking to one of the finance offices that we work with, and trying to think about strategies for increasing adoption of electronic payments. So we know that customers, clients, vendors of our municipalities, they would really prefer to receive an electronic payment, but maybe we're only at 25% of those vendors receiving electronic payments, or 25% of the volume of the checks that we're cutting. Maybe we're closer to 70. So, I mean, there's a range there, but the question is twofold. What resources do I have in front of me that I can look at to figure out who I should be targeting? Who are those vendors who I should be converting to electronic payments? And then to get other leaders excited about the possibility of, which we shouldn't have to get them excited about it, but to get them excited about the financial savings to our municipality providing electronic payments. Also to get them excited about providing a better service. So this is just a particular small example where if we can go into our ERP, or maybe we have this information in our treasury or finance function, just looking at the number of checks that we issue. In this particular case, what are the number of checks we're issuing under $100? What's the average size of those? What are the costs associated with cutting a check? I mean, there's postage and there's envelopes, but there's also that bank charge that we're receiving. And then we can start to look at, okay, well, let's just assume I can convert all those small payments to electronic. Maybe I can do 10% of the bigger payments electronically. What's that value? And in this particular case, we've come up with the notional savings of $21,000 a year, but I could slice it and dice it differently. I could say, well, you know what? Maybe I'm never going to be able to change any of those 14,000, those smaller payments, because those are going to be really tough. But maybe I could do 50% of that next range of checks. And so this just helps to tee up a way to think about the savings, but it all starts with knowing how to access your integrated financial management system, or ERP, and then combine that sort of payment information or check information with your banking data so you can figure out the value of making this change. Everyone will agree that it will provide a better service, but sometimes it's important to get the dollars associated with that, so that in case you need to convince other people of that. Another one is making sure you have up-to-date business continuity plans. Now, some of this sounds repetitive, and I always like to say when I give a presentation, I'm probably not going to tell you something you didn't already know, but hopefully I remind you of something, or I get you to think about it a little bit differently than maybe you did before you saw the presentation. But business continuity was particularly important. It's sort of so in a way so obvious to say, but it was super important during particularly the COVID period, where we had a lot of people working from home. We chose to have some people come into the office. We use combinations of all of those things. You've probably done this, but are there any lessons learned that we really haven't incorporated yet? Are there some ideas that, maybe halfway through, or as things were starting to get back to some normalcy, that we thought were a great idea, we should try to implement? Maybe we just haven't gotten back to that yet. So what are those things that we're incorporating back into our business processes? The other thing is looking more globally. So if we're on a finance team or finance function, we need to make sure that our business continuity planning is aligned with other departments in our government. Could be purchasing, could be budget, human resources. Obviously, all of those things that need to work together. And when I think about this presentation, I think about sort of advice to give to people. We want to differentiate between what are things that we can control in our own office versus what are those things that we need to work as a team to do. So some of these things that cross different functions, obviously we need to work as part of a team with other agencies or other human resources departments, administrative departments, and others, again, we can do on our own. So maybe there's some pieces that we can change right now in our Treasury function to sort of go back to some of those best practices, but maybe there's some others that we'll work with other groups on. Another one here on the last bullet point, in terms of thinking about risk management, which I think is an important one to gain through, if you want to say it that way in your mind, which is, what duplicative systems do we have in case we have an issue with a financial institution? Now, I don't think that, and I don't want people to come away with the idea that I think there's any issues with any particular financial institution. They're not. Financial institutions in the United States, they're well regulated, they're well run. That is not sort of in question. Question is whether, if there was some extraordinary event where I couldn't send my ACH file to my principal bank. For some reason, I couldn't send the ACH file to them to make those payments, whether it was for payroll or maybe it was even my regular accounts payable run. Do I have a secondary bank that I could immediately flip the switch and send them that ACH payment file, or I could send them that biweekly payroll file? That's the question I'm asking here. So maybe I can create the file, but for some reason I just can't get it to bank A. Do I have a way to get it to bank B so that they could settle all those payments for my employees or for my vendors in that particular period? Just something to think through as you think about your processes. Similarly, if I use external money market funds and I have a process where I transfer funds to a particular money market fund, do I have the ability to bring back that money to only the original account that it came from, or can I bring it back to another of my town or cities or counties operating accounts? Again, just to make sure that we have duplication and we can get a hold of our cash at different periods of time. A third one, again, probably sounds self-evident. You're probably like, yeah, Mike, of course, we need to make sure that we're cybersecurity aware. And this is also one where, is going back to my comment before, where some of these things are under our own responsibility, meaning things we can do on our own. And some of these things we need to make sure that we're working with our IT office, our chief IT person. I'm drawing a blank right now on that person's name. CIO, all right, Chief Information Officer. Some things we can do by ourselves, some things we need their help doing. But for example, some of these we can do on our own, like making sure that all of our staff understand that we can be the target of hackers, and that they understand that, and that their daily procedures and their daily awareness is aware of that. Keeping software up to date, that may be something where we just want to make sure we're plugged into our CIO or our IT office. Understanding about phishing. In your offices, you get many calls a day, many emails a day. Do people understand what phishing is, and not clicking on links and emails from people that they don't know? All these things are very basic. It's just something that has to be continually reminded to our employees to make them aware. Things like password management, et cetera. Another group of things, sometimes these are not seem so obvious, but not leaving devices, whether they're mobile devices, unattended. Also safeguarding protected data. Back when I started working as a junior person in treasury management, maybe you all still have that, we used to have a big safe in our office. And so we'd sometimes have to store things in the safe overnight. Do we have a process for making sure that the safe is locked all the time? Just as an example, when overnight is something someone has to remember to do when they leave before the end of the day. The other important thing about safeguarding protected data, and again, I'm sure you all have discussions about this, is something called PII, personally identifiable information. What controls do we have? How sensitive are our employees around how we're handling that kind of information? So that means things like people's social security numbers. Maybe you work as part of your function, you collect that information as part of tax payments or your tax rolls, for example, or maybe you're collecting some sort of payroll taxes, so you need that information. Things like people's home addresses, et cetera. How are we making sure we're safeguarding that and using that in a proper way? Just to give credit, this particular, these top 10 tips came from the UC Berkeley Information Security Office, just to give credit to them on that one. Just because Halloween's coming up and we have to have a little levity in our presentation, I saw this morning on LinkedIn. I didn't create it, but I did see it on LinkedIn. And I just thought it was kind of a funny, cute cartoon to put into the presentation this morning. Hopefully I don't have to explain it, but it just struck me as kind of funny, especially as we were thinking about doing the presentation coming up today. And I also sent this to one of the founders of our firm today, who's very involved in making us aware about cybersecurity and security awareness. And so hopefully he's going to get a chuckle out of that as well. Another important thing is being open to innovation, open to new ideas. Again, seems self-explanatory, but it's certainly important. And there's also this idea, which I think applies very much in the public sector, but usually it's talked about in terms of entrepreneurs, is there's a big difference between working in your business and working on your business. So most of us spend a lot of time working in our business, meaning we're making sure the payments are going out, we're approving payments, we're working with our staff on training, or maybe we have human resources things we're trying to solve. So that's what we mean by working in your business. The open innovation is the sort of working on your business. Do I have time? Maybe it's 10 minutes, 15 minutes. Do I have some time during the day where I can just think about where do I want my treasurer to be, or my finance function to be in a year, 2 years, 3 years? So that's what we mean by open to innovation, having that time to think about these things and working sort of on your business. And as an example, and I'm sure many of you all have already know about this and have implemented a lot of these things, it sort of goes along the lines of, thinking about digital payments. How should my finance department fit into us accepting more digital payments? It's not just us that have to participate in this discussion. Of course, we may have our DMV, we have our Parks and Recreation Department, maybe we administer court system or sheriff's offices. There's many things that we have to consider in this. But again, are we doing all we can to sort of move our collection and payment systems in an electronic way? And here were just some other ideas, again, to think about, well, what should we be thinking about? Where are we trying to go with our finance function here, particularly on the cash management side, cash and treasury management side, over the next couple of years? The one here, I think, again, is sort of very interesting, and it's something to give some thought to, is things like PayPal and Venmo. A lot of folks, especially younger people, use Venmo quite often. It remains to be seen whether we in the public sector can sort of figure out where that can be applicable. There are some challenges with doing that, but it's just one of those things to continue to be thinking about. particularly in your office as you think about where we're going to go. Is this something we can do? What are the controls in place, et cetera? The other one, again, seems kind of obvious, but making sure you have an active investment policy. Part of the reason that I say that is during the particularly COVID period, and really for the past couple of years, of interest rates have been so low, we may have not have spent as much time on looking at how we invest our cash. So now that rates have risen very quickly, now that there's a lot of, and we'll talk about this a little bit in later slides, a big difference in different investment options and different investment instruments. It's time to make sure we've updated our investment policy so we can take advantage of that. Again, making sure we have the right tools, socializing, so to speak, the investment policy with some of the partners that we already work with, investment professionals, maybe some of our banks. Also making sure that our internal controls are sort of supported by it. In some investment policies, you'll see municipalities lay out who's responsible for certain things, how many signatures it takes on certain things, who can make decisions, who can execute transactions, et cetera. And also making sure that it's approved by our governing body. And I'm sure this is done in 99% of the cases, but important to remind our, whether it's a county legislature, city council, et cetera, kind of what we're doing with our cash, right? Our taxpayers' cash. We're all taxpayers where we live. So what are we doing with our cash and how are we managing prudently? Another important one, again, hopefully you're like, yeah, Mike, I get it. All right. Yeah. But knowing the market and peer benchmarks, it's something super important and also very kind of powerful. It's important in the investment context of knowing the range of options that I have, and again, benchmarks in a particular day. So from September, and one of the things that we do at 3+1 is periodically we will canvass the marketplace on behalf of customers to figure out, okay, I have money available. I'm interested in looking at what's available to me, and then comparing CD rates with Treasury rates, overnight rates, so we can just see what the different options are and see what we're willing, what kind of risk, and I mean that in an important way, but not significant risk, but risk I'm willing to take on. And risk in this case, in the sense of, am I willing to buy a CD where I definitely will have to hold it to maturity, I can't break it ahead of time? Or would I rather buy a Treasury security where I could, if I needed to, sell it a little bit early, but of course I could have a change in market value and not realize the full return that I was sort of originally intending. But again, knowing what the benchmarks are, knowing what's out in the marketplace is an important part of decision making, and that you should be following up on an ongoing basis. Another part of that benchmarking is also looking at your bank fees too, and making sure that you see what are we paying, particularly on high volume transactions like ACH payments or check clearing, compared to what other people in the marketplace might be charging. Another very, very important and hot topic that we have with the clients that we work with and we see in the marketplace is earnings credit rates. Imagine most all of you are familiar with earnings credit rates, but in brief, it's the rate that a bank gives you or provides to you on your balances at the bank that maybe don't earn interest. So there's a value to the cash that's sitting at the bank, and they're going to give you a rate on that cash. Now, some of you will say, well, but I don't pay any bank fees. Well, even if you pay no bank fees, there's an implied value of your cash. If you're letting $1 million sit at the bank, you're using $1,000 a month in bank fees, but the bank says, no, that's okay. We'll waive them. If you take 1,000 divided by $1 million and multiply times 12, you figure out what the your annual ECR is. In this particular case, ECRs are, again, a hot topic. You will not find the ECR in the newspaper. You can't look them up. It's very hard to compare them. But I will tell you, in the marketplace right now, this average is a little low, because there's a lot of banks on the lower end, but we're seeing a lot more banks up in the 175, 180, 190 range. So make sure you know what your ECR is, and make sure you're negotiating with your bank to make sure you're getting the most out of that particular piece of that bank relationship. But this is again where it's important to understand where other people are in the marketplace, and that's where talking to colleagues at conferences, et cetera, to sort of get that impression is really helpful to know where you stand. Another hot topic is know when to go out for an RFP. This is a tough one because it's a lot of work. Putting together an RFP for bank services is a tremendous lift. It can be, especially if you've got 2 or 3 person finance function. Even if you have a bigger finance function, it's a lot. It can take a lot of time, but every now and then you ask yourself, at what point should we go out for an RFP? For me and sort of my experience working, we would typically do RFPs for very narrow and specific services. So we were sometimes looking for very niche providers, or this is going back a few years, we were looking for some very specific services. So we would use the RFP to make sure that particularly technical issues, we got them figured out. But there are other municipalities who, for example, who we work with, who are quite large, and because they have a legal requirement, have to go out periodically. We're working with them on big bank RFPs. But a couple reasons why, maybe the service just isn't what it used to be. Could be that they don't answer the phone as quickly, you're not getting the service from them that you want. Another thing is sometimes the rates are not adjusted as quickly as you would like. Mentioned the ECRs, the earnings credit rates, but maybe even the bank money market fund products are not sort of keeping up, and the bank seems unwilling to negotiate. Sometimes you started doing business with Bank A, they were in the town for years, and suddenly, maybe the branch closed, or the branch across the street that was the original reason why you did business with one of the bigger banks, maybe that branch has closed and sort of moved somewhere else. It's not convenient. Sometimes that's sort of part of the issue. Sometimes just making sure that your taxpayers, your city council knows that you're looking at this periodically. Another thing that happens sometimes is perhaps we've been doing business with that smaller local bank, which all have a role in sort of the banking landscape for our municipalities, but maybe there's certain products that they just can't offer that we want to take a look at from maybe a particularly bigger bank who can do some more innovative things that would fit with kind of our vision of where we're trying to take our finance function. And then I listed down here, maybe it's been 3, 5, 7, 10, you pick a number, years since you went out for your last RFP. Some people are comfortable saying, I got to do one every 3 years. Some might just say, it's been 10 years, maybe it's time for us to sort of take a look at stuff. So that's kind of up to you, but that's another thing that goes through people's minds. Here's another one on optimizing your banking structure. Again, you're probably thinking, Mike, come on, I know all that, right? But this is a little graphic we sort of put together that there still are folks out there who have this sort of before, right? They have, for different reasons, and every bank account and every process has a history as to why it got put in place. But we still see, and there's still folks out there who have this sort of before picture where there's a story for every account. We put things in place and it's been sitting there for a while, but now we've got these convoluted business processes of how we move money around, how we do our daily cash positioning, how we figure out how much cash that we need on an ongoing basis. And if you're in the before, one of the symptoms of being in the before is if someone comes to you every morning and says, oh my God, we got to send a wire to move money from bank A to bank B, you're probably in the before stage. Hopefully you looked at your business processes, you've thought about how the account structure should look. The business process supports the account structure supports the business process, so that you're not waiting every morning for, oh my gosh, we need to send this wire right now because we need more money in bank A and we have too much in bank B. Hopefully you've got something that looks closer to my after graphic, where there's a logical structure and we have arrows moving, but those arrows can move the opposite ways too, right? So we've got money going in and out of our investment accounts, got money going in and out of our bank products. got our payroll account, we've got our federal funds, right? So maybe we just want one account dedicated to any federal or state funds that come in so we can reconcile that. I know that's often an issue. We think that by having more accounts, it makes it easier to reconcile, or let's say individual accounts makes it easier to reconcile. But at some point, there's too many individual accounts, and then it becomes a real bear to figure out how to reconcile them. So hopefully we can get to the after as opposed to sort of being in the before situation. As I've sort of gone through these 10 things, you know, one of the things I'm trying to do is to build our base, meaning we understand how data can help us. If we understand what our investment policy is and what it should look like, we get our banking structure in place that we want. If we got our cybersecurity and our IT sort of security in place, we can build towards different things. So we've gone through, we've got all those things in place. And now once we've got that banking structure, we decided to go out for the RFP on a good banking structure, you know, we can start to realize some savings if we do go through that process. So this is just an example of where it's not just the fees, but hopefully we've reconfigured our business processes so we can have a fewer number of accounts and hopefully fewer fees on an ongoing basis. So we get the benefit of not only the bank RFP, reducing some of our costs, but also the business process sort of re-engineering, reducing some of the costs that we're having to provide for. Another important idea, and something that we talk a lot about with the people that with our clients and folks that we talk to, is that we understand and complement cash flow information with liquidity management information. I'll talk more about that. It's an important sort of fine-tuning point here as you think about, again, your next stages in your treasury, how you get to the different sort of best practices or best attributes. So I often show this slide. When I started way back in the day in treasury management, we used to prepare a big spreadsheet like this. And I'm sure that many of you all prepare this kind of a worksheet. This worksheet is critically important, okay? It's important because it allows you at the treasury function, the finance function, to integrate not only cash into your planning, but also the budget process, right? We need to go through a process where we understand what our cash position is, but we also need to think bigger and understand how does the budget translate into cash? How does our accounting statements, our financial statements, how does that translate into cash? So we need to understand that. We need to be aware of what happens with the execution of the budget. The reason why this is critically important to have this view, there's other view we need, but first why we need this view is we need to understand all those sources of revenue. A lesson learned and why this is important, you know, we had observed a situation where municipality, they have a plan, they know what's supposed to happen. School district doesn't receive, you know, a payment from the state for revenue sharing. That then impacts your cash flow forecasting. If you thought what was going to happen last year is going to happen this year, and you don't have that good communication between and among different departments thinking through, what is this budget going to look like as we execute it during the course of the year? It's not only going to be a budget problem, but it's also potentially a cash problem. So having that coordination, building something like this, like the worksheet, to have that understanding of how all the pieces fit together, again, critically important. But we also need to understand not only that cash flow forecast, okay? And what I just showed you is typically done more on a book basis, meaning what on a book basis, kind of where are we? On a budget basis, kind of where are we? But also we need to then translate that to how do we develop an investment policy and how do we manage our cash off of that? And that's where we need to understand not only the inflows and outflows, but for how long will we have that cash available to us? That's also critically important when we think about our treasury and how we can perform at a higher level. The other really important part, and we haven't talked about this, but it's another important piece of our finance function, is debt management. And by going through that worksheet I showed you, where you can look for potential holes in your cash flow, or you can look for the potential dips. This also coordinates your cash forecasting and your cash management with the debt management activity that you might have in your team as well. Again, much bigger municipalities, sometimes you have a dedicated debt management team, but in a smaller municipality, even some big municipalities, but maybe not the super size scale. I know we're all wearing a number of different hats, so this also helps to work on the coordination between those two things. So I mentioned that we want to have the cash flow forecast, but we also want to think about for how long we have that cash available to us. So if you look at this chart, this graphic, the top line might be that bottom line that I showed you in that spreadsheet a couple slides ago, meaning it tells me at the top level how much cash I think I'm going to have during the course of the year, or how much I did have. But the more important thing is when we look down below that top line, thinking about for how long are we going to have this cash available to us, because if we know how long we have it available, we can do something with it. We can go out, we can invest it for 6 months, 9 months, in some cases, 2 to 3 to 5 years, depending on the sensitivity of our cash and for how long we'll think we'll have it available to us. So for us, for example, at 3+one, this is one of the things that we work on a lot, and one of our primary services to our customers and clients is we help them think through, all right, I've got this flow, but for how long do I think I'm going to have this cash available to me? And then we'll look underneath there and figure out at these different levels, for how long do I think I'll have that cash available to me? Not only at specific points in time, but also thinking through in different stress test scenarios. So I can look at the top line flow, and underneath I can think about, all right, if things go as planned, I should be at level X. If there's a change in revenue, I'm going to have a different result. But in the end, our analysis that we present to our customers and clients sort of gives them this idea of the strategic cash and for how long they have it, which is critically important. And this is what we call liquidity management. How long do you have it versus what are just simply my ins and outflows? Another important aspect, and again, probably seems self-explanatory, but also making sure that we understand the difference between the time horizon that we're investing, our confidence in our forecasting, and also potentially the yield that we can earn. Sounds simple, but it's critically important. So for example, I just run through some additional slides here. Understanding what the Treasury yield curve looks like. The reason why I put this in here is so we understand that that interest rates, typically, the longer you go out, the more you can earn. Again, it seems self-explanatory, but it's an important part. They put some money in their LGIP, and maybe they also have some sort of a CD or some sort of term investment. So this is typically how most municipalities are going to invest. They're pretty conservative. What we try to do, and again, going back a couple slides, is we try to show that yes, you could continue doing what you're doing, but your data actually shows you can have a more robust investment strategy. Now, we don't provide investment advice as a firm. What we do is we provide the data that allows you to make these investing decisions. So you can look at your data, you can understand that, oh, I do have funds here that are going to be available for more than just overnight, more than just 3 months. In fact, more than likely, I have funds that they're going to be stable for even out to 2 to 3 to 4, in some cases, longer periods of time, that I could invest and take advantage of higher rates that are present in the market. Having said all that, there are some people who say, listen, I have a very specific view on interest rates. I think they're going to continue to go higher. I don't want to go out that far. That's great, but at least you have the data that knows what your possibility is, so that when you've hit the top, or when you think you've hit the top, hopefully you make some decisions that will allow you to capture that value. And I just line up to show you, again, on the green bar, where most folks are and where they probably could be if they really dug into the liquidity side of their liquidity analysis on their cash. Then I just try and give you a sense by looking more closely at your liquidity and looking at a little bit longer term, not significantly longer, but slightly longer investment program. You can earn more cash, or you can earn more revenue. So in this particular case, when I showed you portfolio one, which was the more conservative sort of folks investing more overnight, little in the LGIP, versus a more robust investment program. On a base of $10 million, it probably means $59,000 a year more interest revenue. So it can be a very important source of revenue for your municipality. It could be, in this particular case, in this example, a 20% increase in revenue, which is kind of nice. Like interest revenue going up 20%, that's great. We hope that sales tax would go up by 20% or property taxes by 20%. But nice having a revenue stream like interest that can increase, and hopefully too offset some of the impacts of inflation. So by having, you probably have inflation that wasn't built into your budget. It's probably impacting all sorts of different areas of the budget. Hopefully some of this 20% increase in revenue can help to offset some of that, because you probably also didn't plan on interest rates being as high as they are in the current environment. So hopefully you get a nasty surprise, not hopefully, but maybe you have a nasty surprise with increased costs on the expenditure side, but hopefully there's some nice increase here on the investment earnings side, and maybe those two things can offset one another, hopefully, or at least help take the bite out of some of that. And again, just to point out, and this also goes back to all of the different, the 10 things that we've talked about. It's all about sort of taking the different steps. It's not only just about starting at okay, we need a better investment strategy. We need to look at liquidity management. No, it's about, do we have the investment policy in place? Let's make sure we've got cybersecurity in place. Let's make sure we have our business processes straightened out. Now let's think about and continue to do better on the investment side. Can we extend a little bit more? Can we go and buy 3-month T-bills, because we know we're not going to need this cash for some period of time? So those are all things that, again, we think about in terms of the ladder approach or the stair approach to improving our operations. So just the 10 things. Hopefully, folks have reactions to that. Maybe I missed one. I know one that I was sort of thinking about that I didn't add in here is professional development. I think having a really robust professional development program is key. It not only is good for employees because it gives them new skills, but hopefully it also helps them on their own basis do what I was talking about before, which is not only spend time during the day working in their business and working in their particular task, whether it's approving vouchers, it's managing their cash, but also working on the business. So, sharing with your employees, for example, even news articles about contemporary issues in cash management or in their career path, those things become really important. So they individually can start to think about working, on their business. So and working on the business being not only just their role in your office, but their own personal development, their career goals, et cetera. So that was one, probably could have put that one as number 11, but that was one that was also on mine today. But thanks, Kyle. Thanks to NACO for having us on today and sharing this with you. Again, would love to know which ones we missed, so we can also improve this for another time. Who knows? And again, just so you all know, our team's here. We're always available, and all, again, really appreciate the support from and the partnership with NACO. So, Kyle, back to you.
Excellent. Thank you so much, Mike. Really appreciate the presentation and all the helpful content and some really great best practices and attributes that we all can consider, I think, for wherever we are. Just would like to invite the audience, if you have any questions at this time, we would welcome those questions. You can either submit those via the chat function, or if you prefer to ask Mike directly, just raise your hand and we'll be happy to call on you. I did have one question, Mike. I was attending a Treasury conference, a county treasurer's conference recently, and through some discussions, a question came up from one of the counties in their particular state, and in their county, they have their investment policy determines a percentage of cash that can be invested within their budget. And we were kind of having a conversation about that this particular county was saying that they already have all the funds they need for their operating cash, but everything else is already invested. So how would this type of analysis that you're talking about, how would that help that particular county in that case, where they say because of different restrictions that they already have everything in the fixed income that they can?
So one of the way, I guess the way I would respond to that is that, or sort of think about that, not really respond, but think about that, is when we, for example, look at liquidity, and we go back to the table that I had shown in an earlier slide, we try to look at for how long you will have the cash available. It's not just about how much cash, but for how long. So in the case of the municipality that says, yep, I'm fully invested, I guess I would want to know, okay, you have $1 million, whatever the number is, $1 million invested. They may consider fully invested, meaning I put $1 million in my LGIP, so I'm done. I would look more critically, or I would look deeper and say, well, you could take that million, and given the profile of your municipality, and given the volatility of your revenue streams and of your payment patterns, you could probably invest half of that out for 3 years, and maybe a quarter of that for 2 years, and another quarter for 1 year. So yeah, you may be fully invested using a very short-term instrument, but there could be a more robust way for you to invest that cash. So I think that's where I would start to think about, again, not just a question of how much, but sort of for how long you are invested.
It's great. Thank you. Don't see any other questions. I do see a question here from one of our attendees. Tom asks if we can provide the slideshow for the attendees, or if we could have access to that.
I don't see why not.
Okay, excellent. Another question that's come up, a lot of within the NACO universe, we talk about emergency planning all the time, right? Our members are talking about EMA management, working with their states, working with FEMA on a variety of issues, and preparedness plans, mitigation, really doing homework early as a best practice versus responding when disaster strikes. I see a great parallel here to your presentation in terms of doing that on the financial side, but that probably doesn't get as much attention, within the network as the EMA side does. Could you talk a little bit, maybe more in a little more detail about what are some of the steps that the county should be taking on the financial side to be prepared for when disaster strikes, or the potential for that?
So that's a really good question. I guess I would go back to, business continuity planning. And I'm sure that we have colleagues in the Gulf states who are very, very good, and maybe in California with some of the wildfire issues that they've had recently, but I'm sure there's folks in the Gulf states who are very, very good at thinking through, how do I continue operating after, hurricane, or maybe in Midwest, like how do I continue operating if I was hit by a tornado? There's probably some good practices from them that they could share. I mean, so I would say on a peer basis, I'd want to talk to folks in Dade County, sort of Miami area, who are hopefully this is top of mind for them. They're constantly thinking about this. But for me, that's where I go back to, we learned a lot during COVID, right? About working remotely, which I'm from the Northeast. we used to think about, it's sort of interesting and weird in a way, but we would think about, and this is a long time ago, well, what happens if there's a big snowstorm? What would happen if none of us could come to the office, right? This is way before anyone ever talked about COVID. So we had been thinking at different times about, well, what can we do from home with electronic banking? What can we do from home in terms of how we access the financial system, in our particular state? So we had talked about some of those things a long time ago. A lot of those things had to get implemented right away when we were in the COVID period. But I think you want to go, but now I think another question is, okay, well, now I've got folks working from home. Terrific, right? We know that that can work. But again, for me, living in the Northeast and maybe, obviously other places, if I'm at home working and I have Comcast or I have one of the internet providers and there's a storm and tree falls and knocks out power to my house, I'm done. I have no more internet. So how do I do my daily, banking? How do I do my daily cash positioning? So even something small like that, it's not just about business continuity planning for our office in our, county seat, our city hall, but also what about business continuity planning for my folks who are working remotely when it comes to things like power outages, internet outages, those kinds of things. And so I think the same sort of thought process has to go through our minds when we think about what happens if tornado strikes, what happens if, hurricane strikes. But that also in bigger issues comes back, particularly in the procurement side, right? We need to have purchasing people who can go out and do field purchase orders, who can maybe use some sort of prepaid debit card so they can go to Home Depot and buy plywood or buy materials that are needed for disaster recovery operations.
It's very helpful. Thank you, Mike. And we have one follow-up question, sort of in that same vein, but focused more on the cybersecurity side. This is coming from one of our participants. Are you seeing more of your clients establishing relationships with more than one financial institution to ensure the continuity of operations in the event that a ransomware event occurs at one of those institutions and those funds are, temporarily frozen or unavailable? So are you seeing, establishing more than one, trying to sort of as a mitigation practice?
Yeah, I love that question. That's fantastic. That's kind of now, so when I made that comment and when I put that comment in the slide about, how do if for some reason I couldn't transact with bank A anymore, I couldn't get them a file for whatever reason, could I flip a switch and go over to bank B? I hadn't really thought, honestly, so much about a ransomware specifically, but there could be, different reasons, as to why I can't transact with a certain financial institution. Or maybe there's reasons why people don't want to transact with me, right? So there's a flip side to that. What happens if my municipality was hit by a ransomware attack and my partners said, whoa, hang on a second, we don't want to accept files from you, or somehow there was some reason why they didn't want to do business with us. Those are things to think through. But if it was me, I would want to make sure that, yes, I had my principal banking relationships. I had my good banking structure that I had in place. But I would want to make sure that in my back pocket somewhere, I had the option to flip a switch and have a backup just in case. And again, many years ago, I had the experience where the wire system for a particular institution that we were doing business with, great institution, but for some reason they had an outage, and it just happened for a period of time during the day. And that made us think, what if, and went through this planning, and we actually tested, could I send that payroll file to bank B? Could I send that ACH file to bank B? Could I send that check issue file to a different bank if I wanted to print checks over there and still have my positive pay going on? So I think it's important. Clearly, each municipality has to weigh, how risky is this? What would the cost be to doing that? it's definitely worth a conversation and thinking through how you would do this. But it's a really interesting question, so I appreciate it.
Great, thank you. Well, it looks like we're coming up against the hour right now. We have just 3 minutes left. Just want to ask before we end today's webinar, if anyone has any additional questions, please feel free to type those or raise your hand, and we'll be happy to answer those. And if there's anything as a follow-up that maybe a question that you didn't want to ask or that you are reminded of after the presentation, we'll provide our contact information so that you can send us those questions. And I guess that's the final question for you, Mike. If anyone is, there's Mike's contact information. Feel free to be in touch. And I suppose if anyone would like to learn a little bit more, maybe take a deeper dive about what 3+1 does, or some of these, even discuss some of these attributes that you've discussed here. Is this, we just want them to reach out to you directly? Would that be helpful, Mike?
Yeah, please. You can also find us at 3+one.us on the internet as well. You can also go to the NACO website. You'll find us. I think you'll find us there. But yeah, definitely send me an email. We're always interested in talking to folks, and particularly finding out more. We're always interested in finding more about what's going on in the marketplace, what kinds of things are on people's minds. Because if you have a question, I'm sure it's a question one of our customers has asked us, or something that we've already looked at. But oftentimes, like the question that just came up about the ransomware and all, it just sort of drives home the point in a different way. Thinking about these sort of contingency planning and disaster recovery, that I think is critically important.
That's great. Well, I'd like to thank you again, Mike, for your time today and sharing a lot of these insights with you, and really appreciate you putting a lot of thought into this and just helping us navigate this landscape. So thank you for that. I would also like to thank all of the participants. Thank you all for joining us for today's call. We know how busy you are within your counties, and we just can't thank you enough for your support, as well as your membership in NACO. So thank you for that. All right, well, I think that's it, and we will let you get on with your day, but thank you again, and we hope that you'll be in touch, and hope you have a great rest of your day. Thank you all.
Thank you.